Patrick, thank you so much for joining us. I'm really excited to talk to you because you are a chart master. You look at things on a long-term basis. And, we're trying to find that whale, that trade that could 100x, 500x. But in order to do that, you have to really think long-term. That's why I'm excited to have you on, because you have analyzed these things on a very long-term level. So my first question for you is, what opportunities are you seeing long-term?
Yeah, Elliot, first, I'm nowhere a master at all. I don't want that responsibility. It's just learning like every day. So the more I learn, the more I see that I do a whole bunch of mistakes and there's more to learn. But yeah, thanks for the compliment there.
No problem.
And yeah, it's long-term. Everything's long-term. You have to reduce noise, because if you don't have the longer picture, it's like I see it as a tidal wave. So the higher the time frame, yearly, charge, quarterly, there's like the huge prevailing waves that are macro driven, huge macro underlying drivers, stuff that we can't maybe grasp. So you don't want to fight that. If you're a trader, sure, scalper, you could go in and out. But for those long-term trades to get over 20,000% returns, you have to be on the correct side of the trend. So let's say for the assets, like people making huge returns on Apple, just because they happen to get in at the moment when those macro waves were right pushing their stock up, those dips were bought and all that, and push all the price action up. So that's like my main focus. And right now, the chart I have right here is the Dow Jones ratio versus silver. So not gold, just silver, like the super volatile silver, which if that's outperforming the Dow, so in the ratio, you got to be careful. They could both be going down in price, but just that one's going to go down less in price and same thing going up. But if you decide, if you're a hedge fund manager or portfolio manager and you see this ratio, so you see the Dow in the 70s, it was underperforming silver. So the Dow ratio was going down. So silver was outperforming the Dow. You'd actually want to be in precious metals at this moment more than US equities. But as that ratio changed, something macro changed. And you'll see right here in 1983, I could pop up another chart. It's actually where the Fed fund rates, they decided to outpace inflation. So the real rates, they weren't as negative as they were back when silver peaks in the 70s. And then that's when precious metals became less attractive, and the win was in the back of the US equities. And you'll see here, like all through the 80s, you have to be in US equities. They're outperforming silver, outperforming silver, outperforming silver, until there's this big change in 2001. The equities topped out versus silver. And then this was the bull run, the wake-up call. So here you'd have to be in the gold, silver, and they lead the way for commodities. And here was actually a best place. While people were long US equities, they should have been long silver, gold. They were outperforming. But then after that, 2011, when they peaked, there was a change, macro change. And as soon as you see it, it's hard to fight these things. So even if you're a precious metals bull, you got to really check out. Doesn't mean that the precious metals is going to go down the drain, but you're stalling versus you'd be better to put your money in US equities at this moment right here, 2013. And right now we had a change. So in 2018, I called the Powell pivot when they decided not to normalize rates anymore, when they went to zero, when all that stuff, it started waking up to the market that we're heading into negative yields, negative real rates. Even if inflation's low, I know everybody says we have been in disinflation since the 80s, but what counts for precious metals is more the real rates. So even if inflation is super low or going down, if the real rates are even lower, then it's still attractive to have metals. And right now we had a pullback right here. So everybody here is super bullish precious metals and an August peak. And now we've been pulling back to this Ichimoku cloud, which was support. And now this is going to probably hold a little bit, give some resistance. Could even draw a line here. Here we're starting to create red cloud. So that's red Ichimoku cloud, defined decline, which will be eventually resistance. So right now I'm expecting precious metals to actually turn around and start to outperform the US equities. So we're approaching a high fear entry in the precious metals market. Everything's been consolidating for 4 months. A lot of people think it's the end of the line, but this is actually on these big trends. You'll see that once they start reverting, once you get out of that cloud, there's not a lot of whipsaws. It doesn't, the cloud see here, it supports. There's not a lot of whipsaws. So once we're below, I believe really this is going to hold, or we're going to go sideways a little bit. And once it starts dropping again, that's really going to be game on for precious metals. That's like the main premise to be long commodities. So whenever you're You're not sure, come back to this chart and say, where am I situated? Should my money be in US equities or should it be in precious metals or silver? And right now, for me, it's clear that the game is for precious metals. This is the holy grail. This is like the Apple of precious metals, Kirkland, Lake Gold. This is its monthly chart. And even when gold was not doing so well after 2016, when it was consolidating for a few years until 2018, Kirkland Lake kept going up and up and up. And this is a type of pattern that I'm looking at. If I see those, and a lot of these there, and I recently did a podcast, they're covering a whole bunch of silver from Gold Ventures. He calls it the silver portfolio. It's micro stocks, small caps, silver junior explorers. And a lot of them, they're just in this type of situation. They're worth about 20 cents, 30 cents a dollar. And I always come back to this. So this is the beauty of technical analysis. You try to see patterns in the past, the type of price action, compression, people don't want it anymore. But eventually, it's underpriced for its value. People see potential. You're starting to do higher lows. All that eventually creates for potentially explosive situation. And Kirkland Lake, this is monthly chart, so it's not early. So when somebody got in here in 2015, I think it was like 30 cents. Monthly defined breakout. So it's not a daily. It's like this is a solid breakout above an important base, above 1 year, 3 year moving average, about to converge. This is what we're looking for. You load up here 30 cents. And as long as you're above the 1 year moving average, there's no reason to sell, even if it goes sideways. And look at that on the log chart. It just went up and up, consolidated up and up. So I calculated at this point, we're like at $60, $70 Canadian. I think it's like 22,000% move. They're not going to be all like that. But if you spread your lottery tickets there and you have 30, 40 picks and you're able to hold on, because emotionally, this is probably unholdable. Because when this thing pulls back from $5 to $2.50, like in this region here, oh, I lost 50%. Most people are going to sell, then it explodes back up. But if you'd be able to hold, like I always thought like the people like who made a lot of money in the stock market, it's like ignorance is bliss. They bought some Microsoft in the 80s, and then they lost their certificates. They didn't have access to the web to contact the broker if the price went down. If it went down, well, they checked the newspaper and they just like forgot about it. And then 10, 20 years later, they'd have crazy results. Well, this is the type of moves there that we try to imagine that is possible, but you have to imagine that it's possible to be able to hold these through the ups and downs, because it's practically impossible. A lot of people, they try to time it in, out, and good luck with that. Human psychology is going to make it almost impossible to hold, because once it starts going down, you're probably going to sell at the bottom when your patience is like most worn out. Oh, I'm going to sell. This thing's going to zero. And then when it starts going back up, you're not going to buy right away because your confidence has been eroded. You're burnt. You have anger towards that stock. It made you lose money. It's the stock's fault. And you're only probably going to buy on the next breakout. And the next breakout, you might wait a little bit. And by the time you get in, it might go up another 20, 30%. And now it's time for it to consolidate. And then it's going to be rinse and repeat. Then you're going to sell on the low. And then you can buy the next breakout. And you're just going to get emotionally destroyed. So Jesse Livermore type thing, buy right. Buy right's not buying at the top here or buying here at these 1 year to 3 year moving average crosses at 20, 30 cents. This is the buy right moment. And the sit tight is as long as you're above an inclining 1 year moving average, just let it ride. Let it ride. So that's like part of stage analysis framework, which permits you to do that. It's like, doesn't use measured moves. A lot of classical charting patterns, you'd do a measured move, you'd reach a measured move, then you'd sell. That's fine. But what if the stock has more to give you? You need a framework like stage analysis, which is the premise is as long as you're above an inclining moving average. Let's say Stan Weinstein used the 30-week moving average. I use the 1 year on the monthly. As long as you're above it, you hold on. And we could probably even let's put the Apple chart.
Yeah, definitely. That'd be great.
Yeah, let's see how well that respected it. This one respected pretty much the 3 year moving average. So this would have been a buy here. Oh, here we would have got whipsawed out in the 2008 financial crisis. Then you would have been able to ride it again, another shot here. Here you would have probably got whipsawed. And after that, since here you see up, test, up. And you could even adapt the further you go along and you see the support points, you could even adapt your moving average to make it fit the behavior of the stock, its volatility, so you don't get whipsawed. So even here, you see Apple has a nice tolerance for the 60-month moving average. And after that, if ever you close below that, you'd have to get out.
Yeah.
Yeah, these are insane returns, right? But you need a framework that's going to permit you to be able to ride these huge moves. And even if you said, okay, I'm going to stay conservative, Pat, I don't want to wait for multi-year consolidation. Well, even here, the 1-year moving average, let's say for Apple, let's say we had this nice base here above volume defined base. And this would have given you, it would have bought right here. Okay, you might have got whipsawed here. So already here at 400%. And if you would have held on here, okay, let's just move it on here. Okay, here would have been scary. Here you might have sold here. So that's 1,000%. And not in a few years. So it's not that bad. But the hardest part, yeah, it's just holding on to these beasts.
Yeah, I think that's a great lesson. Like, don't listen to your emotions because they're probably being manipulated by the market, and just let it ride and just hold and think really long term.
Yeah, it's all depends. Like, yeah, you have to decide ahead of time your plan, or the market's gonna get a plan for you and you won't like it. So you have to decide, if you buy on fear of missing out, you don't know what your plan is, you don't have set targets. I was trapped in all these things in my beginning. So like, it's experience talking to me, it's not going to end well. So you just need a plan, respect your game work, but that needs practice. Your game work has to be practice. It's always going to be challenged. It's like these boxers, even if they practice a lot, the rookie boxers, eventually they might get hit and they're going to throw their game plan out the window and they're just going to start slugging it out. And then they're pros, not supposed to do that. So only the seasoned veterans, even if they get hit, they still stick to their game plan. Floyd Mayweather, Bernard Hopkins, these type of guys that no matter what happens, even if the going gets tough, they're able to stick to their game plan. But that's through years of practice that you're able to do it, especially because those long-term charts, it's monthly charts. So during that month, look at that wick. There's a wick here that goes down below that trend line. This is the euro versus the US dollar on the 6 months chart. So each candle is 6 months. Man, it's down so much. You're panicking right here. But by the end of the month, the market brings it back up and then it decided that was the fair value. That's the channel is going to be respected. So even here, people are over leveraged. You want to be millionaires overnight. They have $1,000. They want it to be $1 million. Their sell stop's super close. Their option to the gills. Everything's loaded up. But how could you sleep at night? Like the price action moves 10 cents against you, and then your whole position gets wiped out. You do that a few times, and then you say you can't do that. So that way it comes back, like you need money to make money. You need cash flow, steady cash flow from a source that could go in. And it's like, I always think people, let's say new millionaires during the year, they probably had 900,000 in their bank account at the beginning of the year. And they just made that 10 or 15% to bring them to 1 million. They didn't start, people starting with 10,000 beginning of the year that end up at 1 million at the end of the year. I'm not sure that's the majority of the case because of all these emotional pitfalls, because of putting your position size too big. So it's kind of hard. You need time. So you need time for that stock to give you those huge returns, which could happen fast. But if you're too close and you're too greedy at the beginning for too big a position size, the market's volatility is going to wipe you out of the game. And then after that, 2 or 3 years later, you look at the chart and say, "Oh man, I was in Kirkland Lake at 30 cents, but my sell stop was too close." And then went down to 20 cents, and I got triggered out, never got back in. I'm pretty sure a lot of people have those stories. So the earlier you start being patient, a guy 20 years old, 30 years old, putting their sell stops far away, and then adding on, let's say, continuation breakouts and other opportunities, then could compound those returns and have huge gains. But if you try to get greedy, it's not going to happen often. Doing, like somebody said on my Twitter feed, like a one punch walk off knockout, they're not going to happen often. So you can't get too greedy. Position yourself. Don't get triggered out by volatility. You got to be safe, but those huge returns are definitely possible. You just got to be macro wise, be positioned at the turns, and at the turns, like here on the Euro USD, that's where a lot of the money comes in. And if you could position yourself just when it's turning. So this one is the 6 months chart. And we know that the euro, if it starts beating the US dollar, that anything denominated in USD is going to be just valued a little bit more. And every time the US dollar went down, it was very supportive, being in hard assets, real assets like gold, precious metals, copper, all those commodities, uranium, platinum. And we're just starting the corner. So this chart is just showing me that we're just starting a new cycle, which be supportive all the way to 2027. We should have our sales, the win. We should have the win in our sales for that silver, precious metals. And just like you saw in my chart there, where I showed the Dow starting to underperform silver, this is another critical element in the weight of evidence that we're just turning the corner, and that's where you want to be. And you don't want to get whipsawed like right away, like just in the beginning here, because there's all this time to ride the wave. So just going to be insane. Your mother and father are probably going to ask you to get precious metals about here.
I'm sure. No, this is beautiful. Yeah, it's like just a series of higher lows and higher highs. So it's great.
Yeah, it's hard to on the higher time frame, and this is generational momentum, generational channel, 3 times tested here. It hasn't broken down. I know there's a milkshake theories, a whole bunch of stuff, but you got to listen to the chart. And right now the chart's telling me that the corner's turned for the US dollar. Even Canadian dollar versus US dollar, same thing. Australian dollar versus US dollar, same thing. So yeah, this is the era of commodities that are just starting right now.
Yeah, and you're right. Generationally, I mean that chart this could be the final exponential breakout, right? Because it's been in a safe trend, but once it breaks that trend to the upside, that's when it goes really crazy, and it seems like we could be rounding the corner. So
yeah, because once at this corner here, like it's whipsawing. These are 6 month candles, up, down, up, down. The market's trying to figure out where it's going to go. Is it really need up? But once you start going up, look at these candles. 6 months after 6 months, year after year, you're closing near the highs. Strong moves. So right now we're just having this type of Marubozu candle where we're going to close near the highs, and you could have 6 months, more 6 months of these just piling on one after the other, following that upwards trend line.
Yeah.
Going to be pretty impressive, the velocity of the move. It's like I just listened to a Sprott weekly news or news podcast yesterday, and they quoted Eric Sprott, and he said, you want to be in the room alone. You want to feel lonely. And a lot of people here were very lonely, the people that were long euro, even like in 2018 and 19, euro was going down against the US dollar. Everybody was very alone there, and everybody was pro dollar. So you want to be there when all the crowd that were pro dollar, eventually when they start giving up on the dollar and they say, hey, finally, look, this thing's not turning back up, guys. And they're going to want to crowd into the euro. And that's when you're going to get that velocity of all these people that weren't going to go long euro.
Love the long-term look there.
Here's another long-term view. Gold again since 1969. And I was just having fun with fib circles. And you kind of see the arc here. And every time I kind of see this as like a moon. And then you're just like in the movies, like you're spinning, you're heading towards the moon, and then slowing momentum. And then the gravity, it just swings you around. And then you go in for another ride. Bam. You hit that gravitational of the moon, price action slowing down, compressing. And then it just shoots you upwards. It did it already twice. And every time the angle of entry was the angle of exit. So the more you get in violently and you get spun around, you get that same type of performance height-wise and in the distance. Right here, got in, exploded. So I'm expecting this for the next segment. We could have this type at least of angle of ascent. So that's why I added it on here. And we're just turning the corner, closing above, hopefully 1800. This is a 3-month chart. So if we could close a year above 1800, we're going to have a confirmed back test of all-time high breakout that we had in the previous 3 months. And then it's just off to the races. We're going to zigzag up and down along this incline line all the way to at least 6,200, the final target there for by the end of the decade, 2027. With candles, it could easily overshoot. Even a couple of years before, we could have a candle a wick going up, then consolidates for 6 months. That's the log scale. And that's a thing I want to talk about also, like log versus linear. And I had a chat with North Star from Twitter. So if you don't follow North Star, Kevin Wadsworth, I did a few live streams with him. Insane skills in technical analysis. And when anything that's measured in something that's being debased or that's going exponentially, like anything measured in US dollar or fiat currencies, a log scale is a natural fit for long term. So anything measured in log scale targets on the long term for something that's denominated in a fiat currency, since it's being depreciated exponentially as all fiat currencies are, since they're not backed by anything, they're essentially going to go zero. It's like a half-life curve. Every 4 years, the US dollar has been losing half of its value. Then these assets, they have the potential also of going up exponentially and get these crazy targets just because of the way the money is being depreciated. For anything that's a ratio, go on the linear chart because you're measuring it with another asset, and that other asset is not like the Dow divided by silver. It's not US dollar, right? You're denominating the Dow by silver, so you stay on the linear scale. But for these type of charts, yeah, sure, go. Maybe it's like a stock, an asset. Maybe it's going to be hard for it to maintain on the long term. This type, like we saw Kirkland land, see this is log chart, but it wasn't able quite to maintain it. It started slowing down. For something like gold, that's directly measured, big impact correlation to fiat currencies. Yeah, go ahead. So this is very, very, very valid target. It can even get more aggressive as it debase the money even more.
Oh yeah.
Elliot, this one, another view. I was having fun with GANN charts, and it kind of brings back another view, but with those fib circles from the previous chart. 40-year chart, we broke out above in 2008, 7. We broke out above all-time highs, just going upwards. And right now, another arc formation, we're breaking out above. And another type of target, yeah, you see similar targets, 6 to 9,000 in this hit zone right here. It's going upwards. So it's hard for people, gold's going to go back down to 800. Okay, maybe, yeah, but the upper trend right now, it's going upward. So if I draw even a pivot line from the bottom here through all this, it's going to give me a reasonable target, and that's still that same type of area. Until my line charts, my 1-year line chart starts going downwards, then it's hard for me to have downward target. I have to look at the momentum, those macro fundamental drivers, year over year. Even if I have a 30% drawdowns, they should be swooped up swiftly, eventually, and brought upwards. Silver chart, same thing, lag with gold. So right now, huge cup, tested it on the first try. They needed a little rest. It was hard to try to get all the way there, but now we're making another go at it, but from higher up. So it's going to require a lot less energy, a lot of built up energy right here. And we're just about to test that breakout line. So that $30, mythical 30, 31 yearly close, that's really something I'm looking at. So I think I'm hoping we close a year very close to it. If we close above, I don't know, there's not a lot of weeks left during the year, so it could be really, really tight. But if we close really close to it, then the next following year, we're going to be ready to have enough energy to break above it, then maybe consolidate above that important 31, and then continue on. Yeah, about $100 target for 2024. Again, looking upwards and knowing silver's parabolic nature, melt up final nature. That's why this target could be easily overshot like we had in the 1970s and even the 2011 melt up there. Silver, when it starts going, it really gets going. And I see this another magnet pivot line. So from the bottom, I drew a pivot line straight in the middle. That should be a target right here. It's going to get attracted to it.
Yeah, and once it goes up there, all the way up there, which it looks like it will, it's spring coiled to go up. I mean, it seems like it'll have such a bullish foundation that it probably won't come back down to these levels in a while, right? Like 23, 17, 30. I mean, if it goes up there, do you see it correcting back down?
I think before it corrects down, I would imagine that it's going to bust through the pivot line and then correct maybe in this region right here there. But
right.
It's now we're going to be late 2030s. Yeah, it's super far to know there. But definitely there's going to be an excess. Anything that goes parabolic is going to suffer drastically after it's finished. And especially a yearly parabolic melt up you see you suffer. So it's like I don't know. This is probably 68% retrace off parabolic. Went up parabolic. This is probably 30 or 50% retrace of that move. So yeah, whenever it ends its parabolic melt up on the yearly chart, it's probably going to at least correct 50% no matter where it's from. So we'll just have to wait where it is. And once it peaks and goes down, then we could let the dust settle there. It's always higher lows. It's been doing higher lows since the 70s. Higher lows looking 69, higher lows here in 2001, higher lows here in 2013, 15, yeah, mid-cycle here. So yeah, the higher lows, always going to be doing higher lows.
Yeah. Yeah, that's what I was getting at. Just like I don't see $14 silver potentially if it goes back up to 100 because
I don't. Yeah, no, yeah. I won't see a yearly close there. Especially again, it's like this stuff is priced in fiat currency, which is getting debased constantly. So unless fiat currency, there's something that happens, it's just going to go up and up. It's just the nature of the debasement of fiat currency is just being reflected through these hard assets. Definitely. And we're just turning the corner. That's why, again, we're just at the good time. You see, when the momentum's starting to pick up there, these turnarounds, 2003 for silver, right now, 2018, we're just turning around. We're logging year after year. We're going to start logging in green closes. And that's the momentum. You want to ride these nice inclines that we're about to go through. So here we're presently hitting resistance at that 30.29 level. But once we go through, after that, we could be logging a year over year of impressive gains there to go hit the pivot line up there. Okay, this silver chart, I want to show it is just to show the power again of macro, of yearly charts. Then after that, you could do whatever you want on weekly, monthly, daily charts, but don't go against this trend. This chart, I took the picture in March Madness. We just got out of March Madness, so we had this huge wick down. Oh, end of the world, silver's going to $5, deflation. Whatever narrative you want, put in your head. But look what happened. It's the price action now. This is still in 2020. It was right here, right above that neckline. We had a confirmed breakout on the yearly close. In 2019, silver already had a yearly defined breakout. So that was very telling. You couldn't see that on the smaller time frame charts. And right now, it went up to 29. I think now we're like at 24. So we're working our way towards that important neckline. Yeah, these breakout signals, they don't happen often. And when they do, year after year of solid gains. And these wicks, these wicks is going to wipe out any trader on the smaller time frames. There, total destruction, 50% retrace. Nobody could survive that. Emotionally, it's super tough. So you got to prepare yourself for that. Think of your game plan. If you don't want to hold through these drawdowns, then you need to figure out a plan, a moving average system like stage analysis, which is going to get you out. If you want to get out faster, use a faster time moving average, like a 30-week or a 10-week. But you got to figure that out ahead of time. And I have a $27 target, but that's a linear move. That's before I talk North Star. This is like ultra conservative, a $58 target. Once we get out of the cup and handle there, that's an easy target. Because the measure moves, honestly, we should, since money is being exponentially depreciated or half-life decay, we should be seeing targets like we saw in the previous charts there in the triple digit for silver.
Yeah, it makes sense. I like the cup and handle you have there. It looks pretty solid. Wow. I love it. In the context of the Dow to silver ratio, the euro to US dollar ratio, the long-term gold chart, the long-term silver chart, it's just all compiling into at a head. Not to mention the fundamental analysis, right, of just the fact that the US debt is ballooning out of control all at once with COVID. So it just seems like a beautiful storm.
Yeah. Here's another big driver reel. Let me see if I could find out my real rates chart. Huge driver for precious metals. It doesn't matter if you're in inflation or disinflation, whatever you want to call it, as long as the real rates, and this is a 30-year real rates, are lower than the actual inflation rate. So even if inflation's at 1%, but the rates are less than that, then the real rates will be negative. And that's what drives gold, hard assets, because the bonds aren't giving you any yield. So might as well go in something neutral, like holding gold, which will at least preserve your value. And this was a huge run up we had in the silver and gold over the summer. It was a huge drop from a rising trend line. Ichimoku cloud defined the resistance and it couldn't hold, and the real rates really dropped. And that's when we had our huge gains. And since August, that's when we've had a huge correction in the precious metals sector. And we broke down, starting to break down in, I don't know, maybe November, late November, December. Now consolidation breakdown below the cloud. And we're right on the cusp of the next leg up in precious metals. So if this breaks down, I suspect that we're going to have another type rally that we had this summer. Maybe not as powerful because we're heading into that resistance at close to $30. But this should give us a lot of drive there to get up to that $30 mark. And all our junior miners, all those which have been consolidating very nicely, they haven't been destroyed on the, maybe I could show you a few of these. This is a Gold Ventures, a Sitfolio. And even if I look at this, let's say a Defiance. So you see, this is, there's a whole bunch of annotations. So even amidst the silver correcting 20, 30% recently, look at this stock. This is a silver junior miner, exploded on the monthly chart. You could barely see its correction. It's above its all-time highs. This is above an inclining one-year moving average. This is a beautiful, beautiful uptrend. Remember that Kirkland gold chart? See, this is pretty much some type of thing like Kirkland land.
I totally agree. Like right around when Kirkland was like $1.50 or something, that's what this seems similar to.
So here was the official buyout. This was the coming out party, and this candle here, above horizontal breakout line, above a descending trend line, paradigm shift above both moving averages, 1 year, 3 year. And after that, it just kept going up and up and up. So this is potentially a huge multi-bagger. So if you're looking for those 500 type returns, this is probably the type of stock, especially in the weight of evidence in a precious metals bull market, which just started officially maybe in 2018, 19, but it's going to keep running until the end of the decade. This is your 76-cent stock. This is probably going to be huge potential going up. I get goosebumps. Maybe sometimes I get classified as being too bullish on the charts. It's just because I'm looking at like all the angles, and I just see bullishness. And at the end of the day, if I'm above an inclining 1 year and 3 year moving average, that's pretty much what gives me all the confidence to have these upwards target, because that's the momentum. So even if there's going to be corrections, I don't mind, because I'm looking at these monthly charts, and as long as I'm above, I just see up and up and up and up. So you see, that's a great example of a stock that's holding extremely well amidst a correction in precious metals. This stock is not telling you that the precious metals are going down the drain. It's telling you, I'm waiting, I'm holding out, people are buying me, I'm getting ready for the next leg up. A whole bunch of these, even here, like that's another Kirkland Lake type scenario, huge multi-year descending trend line. Nobody wants it, everybody hates it. Now the 1 year and 3 year moving average trying to do a bullish cross soon. Price action staying above. The longer it stays above, then the more the momentum's starting to build up. And yeah, super early for this one too. This one is Aurcana Silver Corporation. So just turning around the corner. And it's like Stan Weinstein, I learned it's forest to trees. You have to make sure you're complex. So precious metals complex is in a bull market. Yes. Is your sector you're in, silver miners is in a bull mode? Yes. And then after that, you drill down and you choose the best stocks within the best sector in the best complex. It's just, they're all over the place. These miners just holding out great. Just at $1, huge pullback here. See this one holding above important breakout line, consolidating right above it. And it's actually, Aftermath Silver is actually breaking out. So if it could close a month above this neckline right here, this one's another Kirkland Lake. So yeah, they're all here. The miners, all these have huge potential. So for those huge gains, I know Don Durrett has a great list of miners. Gold Ventures, Sitfolio there, all these huge potential. They look toxic. They small caps. Who knows? Some of these will never make it out. But if you spread out your lottery tickets and you look for setups like this, like Aftermath, like Canada Silver Cobalt, or all these types of setups which are coiling nicely above inclining 1 year and 3 year moving averages, then you're putting the odds on your chances of having an explosive top, because you're not buying at the end of a multi-year run. You're buying at the beginning, because remember, you're at the beginning because of this thing here. You're at the beginning because of this chart. that's the chart that's telling you that you're at the beginning of the precious bull market, because you're just turning the corner here. You're just starting to outperform US equities. The money, the capital flows, instead of going to equities, eventually they're going to be pouring more and more into those small silver stocks. And like Eric Spratt said, you want to be in that room when there's nobody. And after that, when everybody wants to start going in, that door is too small to let all that crowd go in and just squeezes the price action up. It's kind of weird because sometimes I feel like everybody's in the silver space, but maybe you get a better sense. I'm not, maybe on Twitter, my followers, like everybody's like pro silver. I'm super pro silver, but I'm not sure the real world. When I see a chart like that, I don't think the real world, they're aware of the silver junior miners. Most people, they're probably in Tesla or in stocks like that.
Yeah,
They're not
absolutely.
fully aware of the potential that I think we're still pretty alone in that sector right now.
Absolutely. You talk to any average, average investor who just is new to it, or just even a long time just stock investor, they have no idea about miners. So it's great. Like you said, you want to be alone in the room. And what I love about this chart, so you see how the green and the red, I'm not sure exactly what those patterns are, but you see how right now it just tipped red.
Yeah.
Right? I mean, that just looks like it's about to fall off a cliff into more
Yeah.
red.
Yeah. Well, I do my charts. Sometimes I take out a picture of Sylvester Stallone in his movie there, Cliffhanger, and I would just paste a picture of him here or there.
Yeah.
And a few times I did that, and then I jinxed it, and it didn't happen. But indeed, this is powerful stuff on the monthly chart. So you see it here. It's like we're right here. See that red? Yeah. So we're starting to define the momentum, starting to turn. Could wiggle here a little bit, but after that, it's going to be strong leg down, wiggle up, give hope to the equities, or pull back in the minor and the silver, and then, but eventually, that's what you want to ride all the way down. And then when it goes back up here, I'm going to get hate mail from my Twitter feed. The trolls. Everybody's going to start coming out, but that's because they're looking too close to the steering wheel. You have to be like an engineer. You have to take a step back, look at the big pattern, not just at the wing of the plane. You have to look at the whole plane, the runway, the airport, everything. And this is the room. And the faster you realize that, you're going to waste less years of your life going in and out. I'm 44 right now. I'll be 45 in February. So for me, the timing's perfect to not, if I could ride the bull market till 2027, 2028, I'm going to be in my early 50s. And I want to be happy with decisions I take now, because I'm not going to have many of those chances. Some of the guys I talk to, they saw the 70s bull market, they saw the 2000s bull market, but that's 2 times in your lifetime. And now we're like approaching the 3rd time. For me, I'm lucky. I wasn't aware of what was happening in the 2000s in the precious bull market. I had an eye on it, but I was way, way too green. But right now, it's really great being at the turn point, just like that here, just like that there. It's like, you're at the turning point, Elliot. It's pretty insane, right? It's like you want to pinch yourself. You're afraid that like somebody's going to pull the rug under you.
Absolutely. And that's what I like. I don't mind if the prices are depressed, because it just gives you more time to buy more, right?
Yeah, the patience, and if you're not over leveraged and you're smart about it, and you have another cash flow to help increase your trading capital, that's what you need. This can't be your living capital, because if you need that money to live on, you're going to sell. And as soon as there's a drawdown, you're going to be too attached emotionally to what's happening in these drawdowns right here. There, whenever there's a pullback, you're going to go crazy and you're going to sell, and then you're going to start chasing another sector that's hot because your sector is pulling back. And then after that, when the sector that you jumped in, that's fear of missing out. Let's say Bitcoin's going up, and then you're jumping in Bitcoin, and then to that Bitcoin's cooling down, and like you're going to be all over the place. So buying right is right about now. I can say it's pretty the best buying right place. Like whenever I draw a line, Elliot, I see the chart, I see new lines, new resistance point. This is a pivot line. Test, test, test. Ultra resistance now. It's going to be resistance here on the way up, and it should bounce back down. You don't want to be jumping all over the place. You want to make sure you're positioned right. And until the charts tell you otherwise, you gotta ride the horse there until it throws you off properly.
And yeah, a really important point that you brought up is just don't over leverage, because you want to be around. You want to survive long enough to see this game. Because like if you buy a JNUG, or these triple levered junior gold mining ETFs, I mean, you'll get wiped out before you get to see the grand finale, which is what you're showing. So
yeah, it's guaranteed. I'm pretty sure it's guaranteed. There's so much volatility, daily news stuff, micro news that changes the daily or weekly action of the chart, but it never breaks the macro yearly defined trends. Like I call that like the Paul Volcker moment in 1980 when they decided to outpace inflation. That was a game changer. Powell pivot, 2018, deciding that they're not going to raise rates, not going to normalize. That's another game changer. So these types of things, whoever's elected president or stuff like that, for me, that's a minor news. It's going to create volatility, but it's not going to override. Look, this is way longer than a presidential cycle there, these trends, right? It's not the president of the United States who is Democrat that decided this trend. This is the Fed fund rate, it's policy, it's monetary policy. Because since everything's denominated in dollars, this is a monetary policy that created this type of behavior. It's not much else other than that. Don't quote me on that, micro specialists out there. Sometimes it's dangerous territory of it because I try to put a narrative on the price action. My specialty is more charting, but putting a narrative on something, it's hard to, because it's a whole bunch of narratives, right? That influence price action. This hedge fund billionaire has his narrative. This guy has his narrative, but it's all the mix of all those narratives put together that create all those buying and selling orders that create that trend.
Yeah. Well, every like Ray Dalio, Paul Tudor Jones, all the great hedge fund billionaires are on your side, on the fundamental and macro side. So that's a good thing.
Oh, cool. Well, I'll let them see. Everybody, they're specialists. They have an armada of analysts. So yeah, good. Yeah. It's all good in the price action for now until this breaks above the cloud. You want to be in the silver space right here, for sure.
Mm-hmm.
Yeah, I think that pretty much summarizes my situational analysis of where we are, where you want to be on the turn, but not just on the turn, catching a falling knife. You're on the turn, but that's really proven solid turn, right? So, and just to show that you're really, really not late. Sometimes it feels like you're late when you see a stock advance 20, 30%, but we're really not late there. And eventually we're going to get these type of moves there, these meltdowns. Look at that, month after month there of cascading. These is what I call the whale, my whale hunting there. I'm hunting this whale. That's what I'm going for. And there's not many ways to catch that. And you need to have a macro long-term view to be able to catch these huge gains. Because one day the price action is going to go 10% up in your favor. And then, oh man, got to sell. Well, what's your end game? You have to think about the bigger gains that are coming ahead, add on weakness. And if you try to time in and out there, that's a dangerous game.
Totally. So that was such a comprehensive, long-term view, strong, analysis that I don't have any other questions because you explained everything and, really great. So I'm super happy that you came on to share that. My only question is actually really important, and it's what's the best way people can find you to learn more?
Everything. My hub is GANN Charts 1 on Twitter. So whatever I do there, all my charts there, they could all go there. I have my YouTube channel. I post the links. Go subscribe to my YouTube channel. So that's going to be pretty good. So you'll get update whenever I think there's a chart requires a special voiceover description. Go check it out. Here's our Gold Ventures recent podcast. And it's pretty much like what I did with you. It's all there. And for stuff that's not on my YouTube channel, they could go on my badcharts.com. And here it's let's say what interviews. I'm gonna put a link to our interview. I'm gonna put it here so they could see me talk. All the other interviews I did, they're listed here. Links to my YouTube channel and stuff like that. It's another hub where I consolidate information, but Twitter is the place to be there. It's all here.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.